Welcome to FS Page, where I help you master forex trading with clear, actionable strategies. Have you ever entered a trade thinking the market was breaking out, only to watch it snap back and hit your stop loss? That's a fake out, one of the biggest traps in trading. But here is the good news. Fake outs aren't just obstacles. There are also opportunities. In this video, I will break down what fake outs are and why they happen, how to spot fake outs before they trap you, a powerful strategy to trade fake outs for profit, and stick around until the end because I will share a key tip that can help you avoid 90% of fake outs. Don't miss it. Let's dive in. What is a fake out and why they happen? A fake out or false breakout happens when the price breaks a key level like support or resistance, but then quickly reverses in the opposite direction. Here is why fake outs happen. Market manipulation. Big players, institutions, and banks sometimes trigger breakouts to lure in retail traders before reversing the price. Liquidity hunt. Stop loss orders sit above resistance and below support. When price breaks out, it often triggers stops before reversing. Low volume breakouts. Weak breakouts often fail because they lack strong momentum from buyers or sellers. Have you ever been trapped in a fake out before? Comment below. I'd love to hear your experience. How to spot fake outs before they trap you. The good news, fake outs gives warning signs. Here's how to identify them. Check volume. Strong breakouts have high volume. More traders are entering. Fake outs usually happens on low volume, meaning weak conviction. Wait for retest. Instead of entering a breakout immediately, wait to see if price retests the broken level before continuing. If price quickly reverses after breaking out, it's likely a fake out. Watch candle closes. A real breakout closes above resistance or below support on higher time frames, H1, H4, daily. A fake out fails to close beyond the level and quickly pulls back. Pro tip: if a breakout happens during low liquidity times, like right before market close, be extra cautious. It's likely a fake out. Best strategy to trade fake outs. Instead of falling for fake outs, let's profit from them using these strategies. The Fakeout Reversal Strategy. Step 1. Identify a key level. Find strong support or resistance zones where price has reacted multiple times. Step 2. Wait for a false breakout. If price briefly breaks above resistance but fails to close above it, that's your signal. Step 3. Enter on the retest. After the fake out, wait for a bearish confirmation candle for short trades or bullish candle for long trades. Enter after price moves back inside the range. Step 4. Set stop loss and take profit. Stop loss just above the fake out wick for shorts or below for long. Take profit. The opposite side of the range or 2 times risk for a good risk reward ratio. So step 1, identify a key level. And as you can see, here is a key level. Then wait for a first breakout. We already have a first breakout, but watch out for the next candle. And as you can see, we have another first breakout. Let me zoom in for you to see clearly. We have another first breakout right here. After the first breakout, the next step for us is to wait for a retest. So we have to wait until there is a retest of this zone. So we have a retest of the zone, which is this bearish candle. So this is our retest. So our next point is to wait until price reverses back into the zone, because if you enter at this point, price might continue down and hit your stop loss before reversing, or it will keep heading down. So you have to wait until the second candle or the ones after close right inside the zone. So we have our bullish confirmation. So this is where we can enter a buy trade. So we use here as our entry here, our stop loss right below the wick of the bullish candle. Then we set our target to be as twice as our risk. So anywhere here should be good. So our stop loss here, our entry here, our stop loss here, and our target, which is twice the risk we are taking. See, our target has been hit. I have created a new Telegram channel where I'll be sharing free trading signals. Try and be part of it. It will really improve your trading. Link in the description. Pro tip: the best fake out happens at major support resistance zones and after news events when traders overreact. Common mistakes traders make with fake outs. Even experienced traders fall into fake out traps. Avoid these mistakes. Entering too soon. Don't jump in as soon as price breaks out. Wait for confirmation. Ignoring volume and candle closes. If volume is low or the breakout candle fails to close beyond the level, is likely a trap. Placing stop too tight. Market makers target stop losses just above fake out wicks. So give your trades enough breathing room. Bonus: how to avoid 90% of fake outs. Here is a golden rule that will save you from most fake outs. Wait for breakout confirmation. If price closes beyond support or resistance on higher time frames, H1, H4, daily, is more likely a real breakout. If price immediately reverses, it's likely a fake out. Wait for a second attempt. What's your biggest challenge with fake outs? Comment below and I will help you out. Now you know how to identify and trade fake outs like a pro. Instead of getting trapped, you can profit from first breakout and trade smarter. Key takeaways: fake outs happen because of stop hunting, manipulation, and weak volume. Wait for confirmation. Don't enter on the first breakout. Trade fake outs by entering after price reverses back inside the range. If you found this helpful, hit the like button, subscribe, and turn on notification so you never miss a new trading strategy.